All right, hi guys. I wanted to do a real quick update for you folks on what I'm looking at. Um, let's do this. Okay, so look, take a look. Here's my positions. I told you this is like a project, and I wanted to use this so I could more of a teaching tool. But see my FXE position and my VXS position. These are the Hono Hono trades, basically a synthetic straddle. These expire, as you can see, they expire in 7 days. Okay, so next week, Friday. But I'm keeping them on. I'm not doing anything with them. Why? I'm up, right? And I'm just gonna let them expire wherever they land. Because my risk to reward was super low on those. I mean, what I mean? I had a low risk, high reward. So I'm just gonna hold those. Now, as far as my spiders go, I'll open it up. See, I rolled a bunch yesterday, right? See, these expire in December. But what I want to do is real quick go over rolling because putting on trades are easy. Rolling them is harder. So you can see my graph here. I need the market to drop because the green area is where I make money. If the market goes up, because this is weighted to the SPY, I lose money. So what I'm going to do is I'm just going to illustrate something now. Even though today the market is kind of up, I should probably wait. But I kind of wanted to show you what I was doing. So here, take a look at this golden gecko right here. I sold the 200 call and I sold the 180 put. So I was betting that the SPY will be up above 180 in 7 days at the end of November expiration, right? I also bet it'll be below 200 at the end of expiration, right? That's the golden gecko. As you can see though, the SPY, right? Oh crap. SPY is at 204. I needed to drop like, 3 points for it to finish in max profit or so, right? So, and usually I want to roll on a down day, but let me show you what I could do. Okay, so what I want to do is, and we're gonna try and do this mechanically. So first, I look at the call side and see what it will cost me, if any, to roll to either the roll out, meaning to the next month. Okay, but I'm gonna keep the strikes the same. So I click those two dots in dough. Okay, and then, oh, sorry, my bad. I'm gonna click. Okay, I'll do it again here. So I'm gonna roll this position. So I'm gonna click two because I can't click all four. If I want to click, I want to roll the whole thing. But if I click all four and then scroll up, I can't click on roll positions. You only can roll two at a time. It's not a Doe thing. It's an industry thing, I believe. So I'm gonna uncheck the puts because the puts I already know I make money, right? Because I know we're way above 180. So these are gonna close for max profit. Okay, but when you roll, you want to roll up. Oh, I'll show you. You want to roll out the tested side and then roll up the untested side. So here's what I mean. Click the call side. The call side is being tested. Why? I'm betting it'll be below 200 and 200, and it's above it right now. It got tested. It exceeded, right? So I'm going to do that. Then I'm going to click on roll. Okay, your trade page will show up. All right. Now, this line is where my call and my call position is right now. See, 7 days to go. Here's the bottom. The red is what I'm selling. The green is what I'm buying. It's the call spread. It's the call side of the golden gecko, one half of it. Okay. This bottom line right here is the where you want to roll it to. So it automatically rolls it to the next further out expiration, which is 1 week from now. Look, I can actually roll it for a 26 cents credit. Okay, so if I can get filled, right, I buy myself 7 days basically for it to hopefully go below 200, and then I can make 26. I can add on 26 cents to my trade there. Now remember, now this cost me wait, how much does this cost me? $3 to do. $1.50 for this side, $1.50 for this side to move. Well, actually, it cost me $6, right? Because $3 to close and $3 to open, $6, and I'll make 26 bucks. So it just extends my duration and it adds credit to. I'm collecting more in addition to the other side. Okay, so anyway, so what I want to show you is here, I could extend it to that, or I could push it out to the normal December expiration. And how I do that is I don't change the strikes. I keep the same strikes. I just want to change my expiration. So I can go here and click on this until over here shows December without the W. The W stands for weekly. Okay, so I clicked it again. Nope. Here it is, right? In 35 days. Now I can click $1.25 credit. And what I'm betting on is that it'll be below $200, at the end of December. I'm betting that the SPY will be below 200 at the end of 35 days, and I can collect the $1.25 credit. What are my chances of being right? You click on this little arrow thing; it'll change these to percentage. probability of making a profit is only 35%. Okay, so here we go. Yeah. Okay, so 29, yeah, 35%. $1.24 credit. So usually when you roll this, let's say this is a debit. So you always want to roll for a credit, not a or break even, but you never want to roll for a debit. So I'm gonna change this back to, I forgot what my probability profit was at the other one. So I'm gonna I'm gonna click on expiration up here, and I'm gonna watch over here for this to say November, the one right after this. So I think it was like 3 times. 1, 2. Yeah, see, I could roll 7 days later. I have a lower probability of profit, and I collect 24 cents. Okay, so if I want to roll to December, I change that here, right? See, 35 days. This is the new position. The top and the bottom of the new position. The ones that are in the middle are the current ones. And I hit review and send, and I can send the order in. Okay, so then but now I want to look at what my put side is, because remember, there's 2 sides to a golden gecko. So I will close this. Go back to the trade page. I'm going to uncheck these boxes. I'm going to roll this. And I want to see how much I can collect total. So that was $1.25, right? So click those 2 dots, go up, hit on roll. Okay, so I got to move this like this so you can see. So look, if I roll to 1 week, I can collect 2 cents. I can actually extend this only 1 week, and it'll still be a credit. I'm still adding money to my position. I can collect more money. If you have any questions, listen to Talking Tom and Tony. I kind of asked the question on Talking to Tony, but main thing is a credit. Let's see how much more I can collect if I move this out to the December expiration. So again, I'm going to click up here where it says expiration. I'm going to click on this, and I'm going to watch right here. And I'm going to watch right here for it to show December normal. Okay, see, December normal. There's no W. 35 more days, and I collect 11 cents. All the way down here, though, notice where my put is. Now I want to collect way more than that. And look, this is my untested side. I am nowhere near in trouble on this side. Look where the 1 standard deviation line is. It's all the way up here, right? So what I can do is I can move this up, these 2 positions, keep the spread the same or whatever it was, but just move them up. How do I do that? See this strike button right here? These arrows? I'm going to swatch. I'm just going to start clicking them and clicking them until, even if I sell the 2 standard deviation out of the money, with like an 88% chance, I still make 76 more credit, 76 cents or $76 more credit, in addition to the $1.25 I was making before on this side, on the call side right here. Okay, so the spread is still the same, meaning from here to here is still 10 strikes wide, just like it was before, right? Because it shows my positions over here before. Look, I'll show you. Well, here, watch. I have time, so I'll just clear this, close this, and look. See, they're $10 wide strikes, right? There's a $10 difference between the put I'm selling and the put I'm buying. That's my, my buy side, the 2 standard deviation buy side on the golden gecko. There's a $10 spread. So as again, see, just click on that, hit roll, and then it'll show, and I can just change my expiration date up here again to December, right? See, it's still $10 wide. Okay, I have a 99% if I keep the same strikes, but I'm only going to collect 11 cents. Why not collect more money? So what I can do is I can roll this up right now, and even sell the 2 standard deviation line right here, and I can still see this 2 standard. Wait, I'll zoom in one more. Okay, so this is the 1 standard deviation line. This one and these 2 lines right here. This is a 2 standard deviation line. So I could still move them all the way out here, keep the strikes. Look, 85%. I'd still collect 88 cents. So I can collect more money just by rolling it up. Okay, to this side. Now, here's what's going to happen though. My put side, I'm selling the 197 puts because I'm betting it'll be above 197, right? What was I doing on the call side? The call side, if I roll it, I'm betting it'll be below 200. So my new position, I'm going to want it to stick between 197 and 200. It'll be a much narrow golden gecko, but at least I'm still collecting a lot more credit. You see what I mean? So just for shits and giggles, I'm gonna do that. Okay, so just for shits and giggles, I'm gonna do that right here. So take a look. So here's what I know. I know I can roll both sides to December, and both sides are for a credit. Okay, so I know I can do that. Now look at this other position I have down here. See this one? 199 and 172. It's even worse, right? Okay, so let's do this now. Let's show you a worse position. So I'm going to click on these two and I'm going to roll again. So scroll up, click on roll, and let's roll to December. See, so I want to change this to December. So I'll do that by clicking over here. And I'm waiting for, oh, one more. Here we go. See, December, there's no W. It's not a weekly. 35 more days. Look, I can still collect a $1.09 credit. This is super cool. Okay, but remember this number, $1.99. Only 30% probably are making money. And I'm at the $199 call. So I'm betting the SMPY will stay below 199 at the end of December. Okay, so let's look at what the put side will do now. So I'm going to close this, scroll back down here, close this out, and then, unselect those, select these, go back up, click on roll. Again, I'm going to change this to December by going like this. I'm waiting this for 35. Yep, this is the same one. Okay, it's blocking right now. To move that, just move the strikes up. See, because I'll zoom out first. Look. See, look. I'm betting it'll be above 170. Okay, so I need to move these strikes up. Way there, because they're too far out of the money. See, look over here. I want to get this to about 80%. Or this 2 or 1 standard deviation line, or maybe in between. So let me zoom in a little bit so you can see. Then I'll click in the strikes. I'll keep on clicking, clicking, clicking. Okay, look. This is 81% chance of being right, and I still collect another 68 cents. But look, the call side, this is called going inverted. So now I'm selling the put above what the call was, right? Because if I'm rolling the call, I'm rolling the 199 call. Okay, so what I could do is I could turn this into a honu by switching this strike 1 down, so this matches the, oh wait, no, I'm sorry, 199. So this is perfect. It's a 198, 199 golden gecko now, so it's almost a synthetic triangle. So by end of December, in 35 days, I want the stock SPY to finish between 198 and 199, and I'm going to collect over, a dollar more. So just for shits and giggles. Now, what you want to do is you want to do this because the call side is getting tested. You want to wait for a pullback so you can collect more money. So let's go to the chart and check this out. All right, here's the SPY, right? Let me show you what I'm looking at here. Here's my chart. You see how it's getting weak, 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 weak? I can see it. Same thing that happened to you. Oh, wait, how do I do this? I'm going 2 different charts here. Okay, so I'm going to scroll this way. Okay, right about, here's where we are now, right? See what happened over here before it has a downtrend? Look how it went. See how the bars are thin, 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 thin. You know what I mean? And then it kind of dropped. And kind of look what happened here. See the OBV cross hugging this it's blue average, right? Okay, it's kind of doing the same thing here. It's a little bit higher than I want, and this is a little bit higher than I want. The slow stochastic cross 50. But that's kind of what happened here. So you could stay like these. Each of these bars are 1 day. So it stayed like that for like 2 weeks. Okay, so this is kind of why I want to roll to December. All right, because I don't think it might take less time, but I don't know. I think this could stay kind of where it is for a while. All right, and this is your other slow stochastic, the normal slow stochastic. Okay, and if I just move I'm gonna look at these 2 numbers here, right? If the red is smaller than the yellow, it's a downward trend. So I'm gonna move the mouse and look. It is a little bit lower, so the red crossed below the yellow, but it's kind of been doing that over here. And then you notice when there's a noticeable cross like this, that's when the market starts to dip, right? All right, so I use all these 3. ADX is a new one. I don't know I'm still kind of playing with that. But obviously, if this flattens, if this downward trend continues and this increases, that means that downward trend is increasing. See, like over here. So anyway, that's why I think I'm going to roll out to December or Dece. So let me go back to Doe and, well, let's look at what's happening in the 15-minute chart. I have mine set up like this, so I can either change this to the 15-minute chart, but since I have a grid set up like this, I have my 4 pattern grid right like this. So I can actually see like a 5-minute chart, a 15-minute chart, a daily chart, and a weekly chart. And to scroll through each one, if you just double click over here, it'll expand the daily one, which is right there. And then see these arrows up here? I can just move to the other 4 grids by just moving left or right on these arrows. So I'm going to click left a little bit, and I'm going to go to the 15-minute chart. And remember what I said? Like, look, here's yesterday, right? And the gray is after hours. I'm going to zoom in like this. Remember, here's after hours. It got as high as 204.87. You notice if it can't close and on the daily ticks on the 15-minute chart during the open hours, it couldn't break above this high, right? It's a bearish sign. Look what happened. Okay, now here's after hours last night and this morning. Okay,